All right. Good morning, everybody. So from McElliott, they said we continue to see the combined equities rebalancing hedging needs across the aggregate options and leveraged ETFs being nearly 2-to-1 skewed towards supply, as well as potentially massive deleveraging flow risks. And this was the screenshot they referenced. What could go wrong? You can see some of these peaks in the past where it likes to go parabolic before a significant pullback. It's hard to put a date to that, but I would suggest that or believe that this is probably the April pullback into the capitulation and then, the rip out of it. They're basically saying stay in it, just stay hedged just in case, even though the hedges are cutting into your performance. The NASDAQ up a quarter, with the US and the Dow and small caps less than that. Hong Kong down almost a half. With all the Baba Baidu stuff, I kind of expected them to be doing a little bit better. And the UK's kind of hit and miss between all of that. We don't really have much on the table today other than a sneaky one that is always there every Wednesday. Just sometimes it matters more than others. The 10:30 oil report. Keep your eye on that one today. All you got to do is watch the clock, right? It doesn't cost you anything. If you're trading tonight, watch this monetary policy meeting minutes. It's just like our FOMC minutes. So it shouldn't have, any wow stuff in it that we didn't already know. But if you're trading tonight, just keep your eye on the clock when that comes out. Could see a little something. I think we got a number of Fed speakers talking today. We got Dally, but I thought there was another one too somewhere. We also have Fed speakers from other nations speaking today. Like Green is going to be speaking. So yeah, that makes more sense. This says China's down. And yet we've got KWeb and others up. And I've often said that this page is wrong a lot, that you really got to watch this page on investing.com because it'll use like the previous night's data or delayed data sometimes. Just it's a nice snapshot, see what's going on, but obviously anybody who trades, they've got live charts, use that. This is better if you're on the run and just need to get a quick glimpse. KWeb is up, so China's up. And that fits the narrative of everything else that we've been seeing this morning. The call and the put wall really didn't move. If you looked at the spot gamma note and the levels, they just kind of held their place. The other levels did shift around, but it's the call and the put wall we really want to keep our eye on. We're at the volatility trigger. We got 0 gamma next underneath that 10. Yesterday I talked about the pattern that looks a bit like the railroad tie, like this. I think the NASDAQ has a better version. Maybe it was on the Qs. Yeah, it's a little bit better. But that's what we were contemplating if it started to actually roll over. And it was good timing. I gave a shout out right before it started to really go about how unnatural it was that we had made it all the way into the regular trading session yesterday and we still hadn't dumped yet, right? And it was just moments after I put the post on that we fell out of this thing and started to make our move. Markets, especially the ES and the NASDAQ, they don't do this, right? So it's very rare. And if you see it, you know it's coming. Just load up and get ready. Be prepared for the move. Now, there was nothing really in that gave us a bias one way or the other towards, you know, a breakout or a breakdown. We just had to wait to see it coming. But there was other tools that you could use to kind of get a feel for which direction it might go. Tick, trend, AD, UD, advanced decline, ADSPD, all those breadth tools could have given some signal to the move. And then if you look at, say, banks and Mag 7, banks were up, holding above VWAP. Mag 7 from the open just dropped and was working its way lower. So while the S&P was sitting in that range, you had the Mag 7 just completely falling down. There was warnings and signals that it wasn't looking good. But either way, put that one in your book. When you see that pattern, don't even bother trading inside the range. Just let it break. When it finally breaks, it should be a decent move. So what, right? We're done with all that. Right now, we're fighting yesterday's midpoint. We got to get back above the half, or we are destined to go lower. So there's the mid. $62.30. We got to get through that if we're going to do anything else to the upside. The concern is that we get this little bump here and we're unable to get through the midpoint and we work our way lower. Now, so far, if we're using OCR, we're still getting higher lows. I think we could even argue that we ended up with a higher high yesterday, maybe even just by 1 or 2 ticks. That's a 56.75. That was 56.5. So we missed it by a tick. We got a lower high here, but it's a negligible number across the high, right? So you can call that like an equal high, but we've had higher lows through this whole thing using OCR. We're looking for that lower low now. So if we don't get through the midpoint of yesterday, then that's going to be the focus, is where's our midpoint? When does the rejection start? And then how swift are we going to make that move? The drop yesterday was impressive, to say the least. I got to say it unraveled faster than I expected it to, given how controlled everything has been lately. The rate of change was significant, and it was breaking expected move ranges before each pause, right? So the distance in that leg before the pullback, and then the distance in this leg before the pullback, much bigger than typically would happen. That's more of the kind of behavior we would see from a headline. 67.30. Put that line on the sand today. That's the level that we have to get across. Now we can close within this range. It's a 40-point range. Well, 30-point. I'm using the extension. It's this 30-point range here from 6,700 to 6,730. We could stay in that zone and just chop about all day. And while that wouldn't really be beneficial to anybody, it wouldn't break. But if we put a new low in, then we could start to unravel from there, right? And it kind of goes back to that one discussion we had. If somebody went long, right? Say this was just regular equities, and somebody went long. My drawing tool went crazy. Anybody who took the reversal on that bar, their stop would be down there. The reversal to go higher on this bar, go long, their stops would have been underneath that line. If they went long this day, their stops would be under that line. You get the idea, right? That every one of those lines represents stops. And if they're long, then those stops, that's it. Search and destroy. You got it. If their stops are underneath there and their stops are shorts and we start to unravel, we land in a bunch of shorts, it adds to the fuel and we go even faster to the downside. Then we hit another level of liquidity that's full of shorts, and that increases and we drop even to the next level and to the next level. And it is called seek and destroy or search and destroy. Pretty sure there's videos of it, not by me, but there's videos on YouTube of it. And while I don't subscribe to that logic all the time, I do see the setup from time to time where it stands out and I start to get concerned. Yeah, I've heard it called machine gun or something like oh, there was another phrase for it too, but yeah, machine gun. So I'm just pointing it out there. There is a lot of precedent to this idea, right? Especially when you have a case of higher highs or lower lows, and then you're looking for a potential change in direction. And that's what we're looking at here. So we are developing a topping pattern. If we begin to break down, we have all of the accelerant or all of the fuel needed to get down to 66.50 relatively easy. Because remember, we're running 50s, 67.50, 66.50, 65.50. We're not stopping on the whole numbers. We're going to the 50 numbers. So if we just hold in the lower half of yesterday and we toe the line, fine, we toe the line. It's okay. But if we begin to unravel, we have the capacity to get to 66.50 relatively fast. I'll probably be shopping around for some SPX butterflies that equate to whatever that move is, right? So just kind of pop out there. Looks like 65.50, maybe 6,600 in the SPX. That would kind of tie us in near the midpoint of this bar. 65.87, call it 65.90-ish. I like 6,600. It's just a simple round number. Putting a butterfly down there would probably be pretty cheap if you get it on the 0 day. You know what I mean? This is a low probability trade, like going to the gas station and buying a lottery ticket. Sure, you're only risking $2, but your chances of winning are really, really low. Same with putting on a 0 day butterfly at 6,600. It'll have a really nice payout if we get there, but your chances of actually getting any money are really low. So don't pay a lot for that trade. And of course, you can scatter them around, right? If you're filling them for 5 cents each, then you know, maybe populate the screen a little bit. You could do it in the XSP, right? You could do it smaller, or SPY, QQQ. There's Spot Gamma always recommends using the SMH if you want to short the ES or the NASDAQ. Just SMH has cheaper options, and it's a nice proxy, right? You know, if the indexes are going to go down, SMH is going to go down. And that's one that they recommend quite often as their short vehicle. Something to consider, right? Just remember, it is nothing more than a YOLO. There's no reason to suspect that we're going to break down, that it's going to get ugly, that, you know, that we're going to have any real sell-off at all. So we don't have any market tool right now that says that we should be shorting this market. So if you take that short, you're just playing a YOLO play. Overnight volume at 54, that's within the normal level limit. So nothing really stands out there. We didn't get much of a big move in the overnight. If we were looking for like the kill zone, we can see the kill zone actually open up, which was better than we got yesterday, but it immediately retraced, and you know, just it took that move off the board. So at the bare minimum, it defined our range. We have that micro box now inside of our own Globex range for today. So we have that. Then we have our Globex range, and then we have all of yesterday to deal with. But I would put all of yesterday in two pieces, right? The lower half, which is where we are, and then the whole thing. And that's not unusual anyways, because we usually break yesterday apart with the RTH and then the Globex, right? We usually separate those two. We have two boxes on the previous day. This isn't really all that different. We're just separating it between the lower half and the upper half. And considering how big the last 2 days were, then that makes perfect sense to me. GTFO, as always, right? Got to get out of the box. Can't do anything else. I know it's such a simple concept, but it works. And once you finally accept it, right, then you can start to monetize it. We're in the middle of nowhere. We haven't really gone too close to either side. We're slightly closer to the upper one than we are the lower one by a smidgen, but that's nothing, right? There's really no tell here. If we can get through the half, we're going to try to work our way back to the top. I mean, that's just common sense, right? So we're going to go through that level if we can get a breakout above our own Globex high. Considering what we've done all night, which is, it's hard to see now that I zoomed in, but we are setting those higher lows and we are setting these higher highs, although that one's not much better. Working on it. So as ugly and as choppy as it may be, if I snapped a Linreg line off of yesterday's lows, it very clearly points to the upside. If this is just a pullback before we go lower, we will know it soon enough. Otherwise, break above yesterday's midpoint, aim for that ADR half, and then yesterday's high, and then the full ADR, one level at a time. Our average daily range right now is less than 55 points, which is pretty nice because for a while it was what, like 90 something points, you know, when we had a lot more volatility. Today's floor pivot is lower than yesterday. That's bearish. Price opened underneath that floor pivot. That's also bearish. We rejected the channel on that the first time, but we was able to get through it the third time. We hit it again, and then We worked our way through it. Now we're challenging the upper edge of that channel. We don't have an MDP because we've already hit it. Those were wild days, right? When we could swing to the upper ADR and then the lower ADR and then back to the upper ADR on the same day, those were good days. Boy, some money makers. So now we've got this little bitty channel that we're in, and we need to get out of that to do anything else. It would be worth noting the point of control of yesterday and just kind of, not the point of control, the floor pivot of yesterday and bringing it forward, just in case we do get that breakout to the upside. But it's 67.32 cog line. So, you know, you'd already have that anyways. Otherwise, if we break yesterday's low, we have the weekly floor pivot down here, 66.88. And I like that. It's the RTH low from Friday. It's not the full low, but the RTH low. That is going to be a really good target to the downside. The only speed bump is 66.92, which is right here. It's Monday's Globex low. It's those cog lines, right? Got 32s, 11s, 92s. They always come back into play. It looks like we're trying to develop another distribution. It's just not as clean. It's certainly wide. If that had focalized along the low, it would give us more information, but it's just this broad swath here. Still, that is a structure, and it helps define the idea that we should hold inside of Monday's range. We should. If we give that up, 66.70 and then 66.50 is on the table. The point of control from last week, 66.70 is why I mentioned it. We got this shallow area. So if we do break 6,700, it gets shallow. There's no footprint to really back us up. And 66.50 is incoming. One little speed bump, 66.70. It's like they flipped the distribution over from last week, right? It took the point of control and put it on the top and put the next distribution lower. I think our swim's getting a little squishy, huh? Janky. Ten-day, 30-minute volume profile and TPO. The point of control doesn't line up on these two, but the point of control on the TPO is lined up on the next higher volume node. The problem is we're going to wipe that volume node out before we get to the candles that made the point of control that we're currently at. So we won't see this point of control drop down to match the TPO's point of control. Instead, I think it'll be the other way around. That one will come up to match this one. Otherwise, we are swiftly building out structure across this high. You can see the point of control, the possible location for the next point of control up here. They put a lot of work in yesterday, and it was concentrated in such a narrow band that they were able to build it out really fast. This is a 10-day chart, so it's easy to get lost in that depth. You know, something like this was built over a period of 3 days, and we matched that in less than 12 hours of trading. We made half of that. If we do happen to come back up and revisit this zone, then I think that could be our next point of control. Otherwise, it's likely that the point of control gets moved up to 6,700. One, because as we wipe these candles out, almost by default, that is the next location to go to, and it's greater than this level here. So we would have to build that out more. Otherwise, it just doesn't have enough juice to it. So 6,700 is likely the new location for the point of control when it does move. And we're not expecting to see it move yet for another few days unless price comes down and breaks the low that we have from yesterday. If we can do that and put some more candles in down here, then it's possible that we could see it move sooner. But at this point, it looks like maybe Thursday or Friday. Maybe. The good thing is we're above it for now. So we just got to hold above 6,700. We don't want that point of control ending up over our head. We got a new VPOC now from yesterday, which makes sense in that really tight consolidation that we had yesterday. I generally don't try to get these lines to the tick, but you know, you do you. If you think it's going to make a difference, then it's like 67.50 and 1 tick or 2 ticks, whatever. 67.50 is good enough for me. So if we can get through the midpoint and we try to make our run back to yesterday's high, which is also Monday's high, and it's the high of the week, those are potentially 3 different levels. I know they kind of seem like they're all the same thing, but they count each one individually. So that's 3 levels of resistance at 67.56. But we also have 67.50, which is a big options level. It's the solid round number of the 50 that we've been talking about for months now. Significant line in the sand, and it happens to also be a VPOC line. Now we can get through that, right? Because price can do whatever it wants. I'm not saying we can't get through that line, just that A, if we get close, we're going to go to it because it'll act like gravity and pull us in. 2, we've got to digest what's there and then work past it. Think of all the trader's remorse. Anybody that got in yesterday, and now we're back to that position again, right? Just think about it from your own perspective. If you had gone long yesterday in that range, the thing about a range that's so awesome is nobody knows they're wrong until we leave the range. So if your bias is short, you can load up. If your bias is long, you can load up. And until we break out, you don't know that you're wrong. So if you were long yesterday and it did this to you and you actually held through all that mess and then it comes back, what are you going to do with it? Well, I know technically you're not supposed to puke your position out after holding it for this long, but you know that people will, or they'll double down and say, yeah, it finally came back. It's finally working. And then they're going to trade it. If you were short yesterday and you wrote it down, but you didn't get out because you thought there would be more to offer and it came back to you, again, what do you think they're going to do with it? So I don't consider these levels support and resistance. They're just areas where I expect a lot of trading activity. I want to see it on the dome. I want to see it in the order flow. When we get into that zone, I want to see the action in the time and sales. I want to see the way that the cumulative delta behaves when we get back into that level. So it's just a high area of interest. And you can set alerts, say at the bottom of the range. That way you don't have to sit at the computer all morning waiting to see if it's going to get to that level. You can trade something else while you're waiting for it. $67.50. It's not a surprise. It's really not. And of course, we haven't really gone anywhere on the week. This gray line is last Friday's close. So we're above the close from Friday, but that's really all we have to offer. We're still 3% above the 10-week, so we're in a good, healthy place. This is just a correction in time, not a correction in price, not yet. We're hanging out, digesting. It's healthy, it's normal, it's fine. There's no warning signal in any of this. And that should be the same on the daily since, I mean, we really haven't gone anywhere since Friday. Yeah, we're a 0.5% above the 10-day. It's giving the 10-day time to get caught up with us. We don't have any warning signal here. There's nothing wrong, and we're good. We're good until we're not. So looking at things that are down today, we got the VIX down 2%. It was up almost 6%. A little bit of a pullback there. 10-year, but Thinkorswim has an issue with that TNX. I don't know what to do about it. It's been that way for like 2 years now. That's why I just use TradingView if I'm going to look at the TNX. So I'll ignore that one. Nat gas, the Mag 7 down volume is down. Yeah, it's a double negative. But looking at what's up, we had China, more China, and then, you know, a little bit of China, and then Bitcoin, China again, Mag 7 up volume. There was some Kathy Woods talk. She got into China again. First allocation into BABA in like 4 years, I think they said. Don't quote me on that because I'm not a religious follower of the Kathy Woods fan club, but I just happened to hear it while they were talking on Bloomberg. Some quantum is up this morning, kind of continues what we've seen in the last few days in the quantum space. Solar, uranium. Uranium's almost there. It needs a little bit more work, but it's really close. The mags are up, but not up enough. That's the Mag 7 group. So they're moving in the right direction. We just need them to actually get going. The fact that they're not negative, it certainly helps. But if you're looking at a day like any day and you're trying to figure out what are we going to do today? The market going to go up? Is it going to go down? Is it going to just sit inside this range? It's going to be some external influence that moves this market. We talk about this all the time, right? The ES isn't moving because the ES wants to move. It's moving because something is influencing it. Maybe they're trading the ES because they actually want to trade the ES, but a lot of times it's the dollar, treasury, bonds, yields, 0-day flows, Mag 7, something else is moving the market, and the S&P is just reflecting that movement. So staring at this, trying to find the answers to, are we going to go up or are we going to go down? That's going to leave you disappointed. It doesn't matter if it's Meta, Apple, Facebook, the NASDAQ, whatever it is that you think you want to trade, staring at that chart isn't going to tell you where it's going to go next. Got to get the answers from what's moving the market. And if we can't see the influence, then we don't have a dominant leader yet. When we can spot it, it's fantastic. Take it and run. So this morning, we've got some signals that says we could get through that half. We've got some signals that says that we could continue this upside move, or at least hold the line and not put that new low in that we were talking about. But we need to get into the open, see some 0-day flows, and then watch these particular sectors and groups like the Mag 7 group, Bitcoin, China, to see if they're going to provide that fuel to get us to go even higher, or if it's going to come from something else. Treasuries, bonds, volatility, commodities. At 10:30 today, we got the EIA inventories. So keep your eye on that. I keep meaning to get me one of those Magic 8 balls, or at least that button from Kohl's that says that was easy. Maybe both. See, Crude's been hanging out for a while, and it's not at the bottom of the range, and it's not at the top of the range. If I was to snap a Linreg line, I mean, it would be a drastic short drawing. I think they got Linreg. They probably do, and I'm overlooking it. But it would be a short line, right? It would be angled to the downside like that. So if we can get a breakout and get a higher high here, we could try to get like a scrunched TRB back to 65.5. And if we can get above 65.5, we can go to 67.5 and then on and on. But it wouldn't be a one-day trade. And really, you know, you got to keep asking, why would they trade crude when they could trade copper or gold, right? Or silver. Yeah, I like crude right now. I think it's got some potential. So we had that big expansion bar yesterday, and we've continued that expansion today with an inside day breakout. We have this bar with its wick showing all those sellers there. We need to get through that, and we're almost there. So if we can get into those stops and trigger it even higher, get back to the top of this range, 64.70 something, then it puts this other range on the table for 66. Looking at it on the weekly, it's just that weekly high we have to get through. That 64.70 something, whatever this pivot is. That's a weekly high. Bitcoin's getting that knee-jerk reaction to the upside this morning, so be mindful. We had this drop, right, from 118 down to 111, and now it's getting a reflexive bounce in the other direction. That's not necessarily bullish. It's more of just a reflex bounce back in the other direction. And we're coming into the 786 on that. So I would be mindful of this. If Bitcoin rolls over and when we start to see the rest of everything else roll over, that could be a concern. We're still above the midpoint of yesterday on gold. So gold's kind of the opposite of everything we talked about today on the ES. We looked at the ES and we're underneath yesterday's half, and we have to get above that if we want to keep going. Gold is on top of yesterday's half. And this big wick is concerning. When you think about how a bar closes, you cut that bar into half and then you cut it into quarters, and you want price to be in that upper 25%, right? You want a good 3/4 down here of the direction that you're interested in. So in this case, up. If it was red, down. When we pulled back off of that high and it fell down and closed near the mid, that's not good. Now, that's not a short all by itself, but I've taken that in options trades as shorts because this tail that it left behind leaves a good spot for a stop, right? And I like to get into things when they're still green with puts so that I'm not buying puts when it's red, I'm buying them when it's green. So I've traded these sort of signals before as a short, but by itself, that's not a short signal. It is concerning, though, that it left all of that behind and it closed near its mid. And so that's the concern, right? Is that it can fall below the mid the same way that we're looking at the ES to rise above the mid. It's the same setup, just the other side. So keep your eye on gold. It was a significant move. And if we look at it on the weekly, it's been one heck of a run. 33.20 to 37.70. Wow. It tickles. When it goes to unwind, it will be phenomenal. Plus, take your measured move of that wedge, right? This is just a sloppy little wedge, but it'll get the point across. If that was our wedge, you would measure this distance between the back side and put it here, and that's how far you would expect to see it break. Well, we don't really need to do it the old way. We can just use the drawing here. So we'll just measure that. And we're looking for 50%, which we've already hit, and then 100%. That's what the textbooks tell you to measure. 50% and 100% of the entire range. You do that for head and shoulders, wedges, flags, all of it. It's the same measure, right? So we made the 50%, we shot right through it, and now we're expanding. We've got 38.80 basically for the next measured move in gold. It doesn't have to go there. It could just stall out, run out of buyers. Remember, running out of buyers isn't the same as getting hammered by sellers. So, bring it up on a volume profile, look at it on a TPO chart, try to see the trade history and how these candles have been closing, where the point of control is on them, where the footprints are at, kind of get some clue as to the structure of these, have a better idea of what to expect if we do start to roll over. For today, just watch the midpoint of yesterday on gold. If we break that, could be a nice short bare minimum back into 37.50 or even down into yesterday's lows, 37.40. Yeah, it was the QQQ that had a really nice railroad pattern. All right, guys, you got it. Be careful, be safe, keep your eye on the clock. I'll see y'all tomorrow.